Bioceres Crop Solutions Corp. Institutional Equity Research, ticker BIOX, NASDAQ, BIOX, Buenos Aires. Business, agricultural biotechnology, seeds, crop protection, biologicals, digital ag services, and distribution across Latin America and selective international markets. Flagship asset, HB for drought-tolerant wheat and soybean trait commercialized in Argentina, Brazil. Regulatory progress in U.S. Report date, the 11th of September, 2025. Analysts' view summary. Speculative buy. Hold for long-term thematic investors in AgBio. Attractive long-term optionality from HB for trait, commercialization and platform biology, but near-term execution and macro headwinds make the stock high volatility. Executive summary. One-paragraph version. Bioceres is an Argentina-origin agbiotech group that combines commercial seeds and crop inputs, an AG supply chain presence, and a proprietary drought tolerance trait, HB4, that if broadly adopted outside Argentina and Brazil, could be transformational. 1. Company overview and business model. What Bioceres does today. Bioceres Crop Solutions is a vertically integrated ag biotech and seed company with operations across seed development and sales, crop protection and biologicals, a distribution and commercial platform across Latin America, Argentina, Brazil, etc., and R&D centered on traits such as HB4, a drought-tolerant gene platform originally developed with partners. The company also runs subsidiaries focused on biological products, digital agriculture services, and crop inputs. Its commercial DNA is a mix of direct seed sales and licensing crop input product sales. Potential future licensing revenues for biotech traits, HB for wheat, soy. Those licensing revenues are the optionality that could create outsized returns if regulatory approvals and buyer acceptance accelerate. Revenue mix high level, seeds and trait-enabled seeds, soy, wheat, corn, in selected geographies, crop protection and biologicals, commercial services and distribution, R&D collaborations, and potential licensing fees for HB4 Trait 2. Recent results and operating context. FY25 highlights. Bioceres reported full-year FY25 revenue of $335.3 million and fourth-quarter revenue of $74.7 million, which management described as a challenging year driven by weak crop input demand in Argentina and a partial wind down in certain seed inventory positions. Income statement details, cash flow impacts. The segment disclosures are in the FY25 results materials and in the company's SEC filings. Short-term cash flow pressures were highlighted by analysts calling out a 40% year-over-year Q4 revenue decline in some channels. Why this matters? FY25 shows the company's sensitivity to crop cycle demand in local macro Argentina, which can compress revenues and margins even while longer-term product optionality HB4 remains intact. 3. Industry context and competitive positioning. Macro environment. Global crop input demand is cyclical, tied to planting intentions, commodity prices, and farmer cash flow. Latin American agriculture. Argentina, Brazil is a core market. Currency volatility, inflation, and local farm economics strongly affect orders and inventory cycles. HB for context. Strategic optionality. HB4 is a genetically engineered trait that confers drought tolerance in wheat and soybean lines. Regulatory progress matters. The USDA issued a safety finding moving HB for wheat closer to possible cultivation, but noted additional field trials and steps before commercialization in the U.S. Other jurisdictions have varied approval timelines. If HB4 reaches regulatory clearances and trade approvals in major wheat importing markets, licensing revenues from trade deployment could be significant. However, commercial adoption depends on buyer acceptance, millers, exporters, and pricing terms. Competitors, global seed and trait leaders, Bayer, Monsanto, Corteva, Syngenta, dominate major trait markets. Bioceres is a regional innovator with a differentiated trait, but lacks the same scale and trade influence. Thus, licensing partnerships or co-development agreements are material for scale. For financial statement analysis, top-line margins, cash top-line reported, FY25 revenue equals $335.3 million. Q4 FY25 revenue equals $74.7 million. Profitability. FY25 was a challenging year. Operating income and net income were pressured by weak demand and inventory adjustments. Lower operating leverage and mix shifts drove declines. Balance sheet and liquidity. Filings show inventories and receivables as significant working capital lines. 5-5 notes discuss cash flow and working capital management under a weak cyclical year. Debt levels, cash balances, and covenant schedules are disclosed in the 2OF. Key takeaway: the company generates meaningful revenue but is exposed to cyclical trade. 5-5 demonstrated that sales and cash flow can swing materially between years. 5 Valuation and historical multiples. Market snapshot. The stock has historically traded in a wide range $3.70 – $13. Market cap and multiples vary with share price. Price book has hovered around approximately 0.88. Price sales approximately 0.67 in some snapshots. Multiples. PSTTM approximately 0.6 to 0.8 based on FY25 revenue. PIB often less than 1, reflecting asset base versus market value. Why noisy? Bioceres trades at depressed multiples because the market price is in. Execution risk on HB for commercialization and seed sales. Cyclicality. 6 Profitability and efficiency metrics. Gross margins vary mid-teens to high 20s depending on mix. Compressed in FY25. Operating margin reduced due to lower leverage. Inventory turnover and working capital. Lumpy, tied to seasonal planting cycles. 5-5 saw inventory rationalization and channel destocking. 7 Liquidity, debt, and solvency filings detail precise debt levels and maturities. 5-5 highlighted working capital strain but no imminent covenant breach. Financing mix includes local debt and trade payables. Future HB4 rollouts may require additional capital. 8 Growth and earnings outlook. Growth drivers. HB4 trait commercialization and licensing. Recovery in Latin American planting. Input demand. Expansion in biologicals and digital ag. Consensus. Limited coverage, but analysts highlight HB4 as the major swing factor. 9 Dividend policy and capital allocation. In Bioceres, reinvests in R&D and commercialization. No meaningful dividend policy expected until HB4 licensing generates sustainable cash flows. 10 Management. Governance and insider activity management combines R&D execution experience with Latin American sales. Insider holdings are meaningful, but watch SEC filings for activity. Governance should be judged on R&D rigor, transparency, and partner engagement. 11 News. Legal and regulatory items. HB for wheat status. USDA safety affirmation in August 2020 for reduced technical risk. But trade approval and buyer acceptance remain gating factors. Other legal regulatory, no major litigation disclosed beyond standard IP licensing matters. 12 Competitive landscape and SWOT strengths. HB4 trait, integrated LATAM platform, R&D pipeline, weaknesses, smaller scale, revenue, cyclicality, approval dependency. Opportunities, licensing deals, expansion into other crops, biologicals growth. Threats, GMO acceptance, risk, competition from majors, commodity cycles. 13 Technical analysis and market sentiment. Stock has been volatile. Price swings follow earnings and regulatory news. Sentiment improves on HB for progress. Weakens on crop cycle headwinds. 14 Valuation. DCF and peer multiples. DCF assumptions illustrative. Starting revenue, $335.3 million. Revenue growth, plus 10% year 1, plus 15% year 2. Taper to 4% long-term EBITDA margin. 8% gives 18% by year 5 WACC. 12.5% terminal growth. 2.5% result. Base case implies modest upside, but highly sensitive to HB for licensing timing. Peers trade at higher multiples given scale. Bioceres discounted on execution risk. 15 Scenario analysis. Bull 20%. HB4 approvals in major markets. Rapid margin expansion. Major licensing deals. Base 60%. Gradual HB for commercialization. Moderate revenue recovery. Bear 20%. Approval delays, weak planting cycles, potential dilution. 16 catalysts and watchlist licensing agreements for HB4. Y26 planting season demand margin stabilization and earnings. Regulatory approvals, field trial results 17. Risk assessment GMO wheat acceptance, risk Latin America macro volatility financing, dilution risk, competition from global seed majors 18, analyst coverage and market sentiment limited analyst coverage, ratings mixed due to FY25 volatility and HB for uncertainty. 19. Practical investment recommendation, speculative long, small allocation, long horizon, investors only, income, value, not suitable yet. Traders focus on regulatory partner announcements. 20 Appendix. Where to verify the numbers FY25 results press release and Q4 FY25 presentation. SEC filings and 20F. FY2024 and interim 2025. Company investor materials presentations, events USDA and international regulator updates on HB4 final words. Bioceres is exactly the kind of company that could become a slow burn success if licensing cascades occur, or a frustrating grind if approvals stall. 5-5 revenue declines underscore its cyclical exposure. Investors should size positions conservatively, track regulatory catalysts, distinguish between promotional press releases and signed commercial deals.